Hey there, and welcome to Real Investment News. I'm Mike O'Neill. Right now, the Dow is up about 85 points, the S&P is up 15, the NASDAQ up about 50. And when I was a kid, the worst thing I ever heard my father say was, "Michael Patrick, we need to talk," because you knew that was never about anything good. So investors, we need to talk. Now, today we learned that the real GDP increased just about 2.6% at the final quarter of 2017. That's lower than the 3% that was expected and a slowdown from the 3.2% in the previous quarter. Now, the reason for the slowdown? The trade deficit. Exports were up 6.9%, but imports were up even higher, and this deficit pulled 1.96% from the final GDP number. That's the biggest drop since the third quarter of 2010. And that explains why there has been a lot of focus on the dollar this week. Now, right now, it is at a 3-year low. And Treasury Secretary Steve Mnuchin said a weaker dollar would be good for trade. So why is that? Well, when the dollar is weaker, that means that American products are cheaper in other countries. They're going to buy more of them, but it also makes foreign products more expensive for Americans. So while that could help turn around these trade deficits, Americans are going to end up spending more, and we can't afford to. You already know that Americans have nothing saved up, and last November, consumer debt increased 8.8% to a grand total of $3.8 trillion. That is the biggest jump since September of 2015. Credit card debt jumped 13%. People have been committing to auto loans and home loans because of those low interest rates. And while consumer debt can contribute to growth, it can turn bad quickly if the economy shrinks. That's when businesses cut jobs, consumers will default on these loans, bankruptcies go up. So what else did we learn today? Oh yes, durable good orders jumped month to month. Finally, good news, right? Well, not really. Well, that surge was because of an increase in things like commercial airplanes and their parts and military spending. And when you take those out of it and you take a look at the core durable goods, well, that dropped 0.2%, the biggest drop in 11 quarters. So here we are. Sorry to ruin your Friday. I don't have any answers on how to turn things around except to say that we all need to focus on saving more, spending less, and if you're invested in the markets, plan your exit strategy now. Oh, and I forgot to talk about Bitcoin and the $400 million taken by hackers in Japan, they think. Thanks for watching. Be sure to follow us on Facebook and Twitter and YouTube and see our past reports on realinvestmentnews.com. I'm Mike O'Neill, and we'll see you again in a couple of hours.